Hi guys, welcome to my channel. And today's video will be talking about advanced order block. And I know you've already learned what an order block is, but knowing the definition isn't enough. The real question is what makes one order block meaningful than another. In this video, we're going beyond the basic definition and looking at how traders can evaluate order block with great context. So firstly, what's an order block is generally identified around a significant area that price precedes a strong displacement or directional move, right? Like this point in the chart, just this point or downwards, right? Like a swing highs and swing lows, but price precedes, like I already mentioned, a strong displacement or move from that area. And in many smart money trading approaches, traders pay particular attention to the final opposing candle or areas before that displacement or directional move. Right? For example, before a strong bullish move, traders may identify the last bearish candle as a potential bullish order block. The opposite applies to bearish moves as well. Now, not every candle is an order block. Just because you see a bearish candle before price moves higher does not automatically make it a high quality bullish order block. There needs to be meaningful context like a strong displacement, a meaningful break of structure, a clear rejection or reaction, alignment with the larger market structure. Now, displacement matters because it's one of the strongest clues that approves or makes another block significant or of high quality. Compared to a slow and choppy move, the difference is important. Strong displacement will usually show significant imbalances or aggressive participation around that area. Now, we have our bullish order block and then we have the bearish order block. And as you can see on my screen, the last from this point there's always another block. Alright, so like I said, it's usually the last candle from the previous side. So here we can use this point. So after all the progression to the top here, we have the last bullish candle, which will be this point. You can mark that out. But another thing is, like we all know what our other block candles are, they have to be a fair value gap about 80% of the times around it. So we look for, I would mark out from this point, and now you can see to the opposite side that this is a 1 hour time frame, and other blocks or time frames can differ because you can't have the same other block from your 15 minutes or your 1 hour. They differ and also have differences, like some are stronger than the other. So it's important that you identify all of that. So this is another block, and you can see price got into it, and then this, and then price sold all the way to this point, signifying another possible order block around that area. So now, this particularly at this point, like I said, you have your displacement or your break of structure and all that. So significantly what we do most of the time is, here is a break of structure, there's another block there, then we have a break of structure, and then price persists all of these points, returns to it, and then we have it here. So most of the time what many traders do is like target the next significant point, which should have been here, but you can't always tell. So that's why most people would say always have like a decent target or plan. The market doesn't owe us anything, come with what we have. It gives us what we can take out of it. So we have the other block sitting here. Let's mark that out. That's a bearish other block. And then price meets it, and then this is the next target. Sorry, I caught a cold. And this is the next target around this point, right? And that makes it. So now, that's like I said, this is our bearish order block. We also have bullish order blocks for it. And then you just probably have a target from to go short. So another thing I need you to understand is you have to always identify your trend and your market structure correctly before you actually mark out your order blocks. You have to mark the one that aligns with the trend. So perhaps we'll have it slightly here. And then this is like a 1 to 4, right? But always have a plan, because you wouldn't know it was going to get to 1 to 4. All these are just back tests. So let's say we had a 1 to 3, pretty decent, right? Or we top down, and like I always say, we top down and then and then we mark out right, still the same. But this is a 1 to 3, and you can see how that played out, right? So that applies when you have in the reverse case. Let's go back to the higher time frame. Now we have another block here. Not all other block gets mitigated all the time. There's another block here. Even still, there's also another here, but price got into that one. So there's one here. Yeah, displacements, which are the other blocks, and then if you pull it out, you can see. And then like this one we marked out, there's a breakout structure at this point. There's also another at this point, which is what we identify as the displacement. Because first it was a bearish move, and price went upwards, break the last lower high, and then you can see all these candles. Because especially from this point, this is what we refer to as the displacement. That very big candle that broke out, that made the breakout from the last lower high, is the displacement. And then it created a break of structure, price pulled back into it, and it continued going, respected this other block, and then came downwards. You can see, like I said, our target should be this point, right? Obviously price did get there, but it's slow, right? Which is, you can see it from this point, and it happened. So that's just literally it. There's not so much to it. We already marked this as the bearish or the block. This will be your bullish or that block, because once price gets down that block, price immediately becomes bullish, right? Bullish. Please ignore the noise at the background. Bullish or that block. And then there's a breakup structure here. And that's literally it. That's all that there is to it. So now we always have mitigated order block and non-mitigated, and sometimes price even ignore most order blocks and just break through it without respecting it. This will usually happen on the lower time frame than on the higher time frame. This is the 1 hour, which is why I've advised you use the 1 hour while you trade. So you actually don't make mistakes. So like I said, not every other block would hold at the end of the day. So it's important that you know which. Alright. So yeah, that brings us to the end of today. Do like, share, comment if you have any questions, and then subscribe to my channel. I'll see you guys in the next video.